What's up, ninjas? We are going to work a question in Ninja MCQ for auditing over professional responsibilities. Now, professional responsibilities for audit and also regulation, it's one of the worst topics in both of those exams. It's extremely boring, and some of it can be confusing because sometimes it seems like there's more than one right answer, but you always have to choose the best answer. And the good news is that once you pass the CPA exam, most of you have an ethics exam to take. Woohoo! All right. According to the AICPA Code of Professional Conduct, which of the following financial interests in the client during the period of the engagement impairs a CPA's independence? And the professional conduct rules, a lot of them get into independence. And some of them can kind of be a little bit tricky. So which of these financial interests would impair your independence as a CPA? All direct and indirect financial interests, only direct financial interests, only direct and material indirect financial interests, or only material financial interests? Well, the answer is only direct and material indirect financial interest. So let's go over some examples. A direct financial interest, if you are an auditor and you own a share of stock in the company that you are auditing, you cannot do that. That is a direct financial interest. It doesn't matter if you own one share or 100,000 shares. Materiality does not matter when it comes to a direct financial interest. An indirect financial interest would be a mutual fund. If you own a mutual fund, and mutual funds have many stocks, and so the company that you are auditing might be 2% of that mutual fund, and then you own a couple shares of that mutual fund or whatever. If it is material, if that mutual fund is material to your net worth, so if it's greater than 5% of your net worth, then that is a material indirect financial interest. So let's go over a direct financial interest. It is direct ownership in the client, like you own stock. And again, with a direct financial interest, materiality is irrelevant. A material indirect financial interest, it exceeds 5% of the member's net worth. Let's scroll down here inside of Ninja MCQ. So an example would be here we go. A mutual fund that owns shares of the client, or a lessor-lessee relationship with the client, litigation, or the client or the member is owed fees by the client. That is an indirect financial interest, and it cannot be material. So more than 5%. All right, so this was short and sweet. I hope you found this helpful. If you would, please share this with someone who you know who has taken the CPA exam. That would be awesome. Thank you for watching.